Lawrence has some interesting data that's been compiled by the TIE on the Gamma Exposure Index. The index gives us a sense of how exposed the overall options market is to moves in the underlying crypto. Lawrence, talk us through this. How has the Gamma Exposure Index been performing for Bitcoin, and what does it all mean?
Well, let's take a look at it. I think we have a chart coming up, and this, of course, I got to, one of the fun things about being at the TIE is they give me all the charts I possibly want to play with. And as you know, I kind of love doing that all day. I don't tell them, but this is just, I goof off all day and make these charts. So if you look at this chart here, this is the chart of Bitcoin, which is the red line, the price of Bitcoin, and the Gamma Exposure Index, which is the blue line there. And without getting into the mathematics of how it's calculated, let's just say this. If it's above zero, that means that the options traders are net exposed long. So the way to look at it is every time the price goes up, the options traders make money. And we see here that for a long time, they were heavily long, they were net long, basically. And then all of a sudden the price, or rather the Gamma Exposure Index went down closer to zero. That means that either, they're buying a lot more puts, they're selling their calls, things like that. But it creeped back up a little bit. But notice that it rarely goes below zero.
So, Lawrence, we have another chart on the open interest in terms of contracts. So can you break it down for us in language that, non-astrologers can understand? What this says about...
this isn't technical analysis.
You have to explain the joke now to the audience.
Yeah. So, I'll let Emily do it.
Yeah. Well, I don't know if this would fall right into that category, but technical analysis is astrology for men, we like to say, and Lawrence is our chief astrologist for men.
Yeah, and I'm not. I'm actually not. I'm sort of a debunker of it. But in this case, this is not astrology. This is actually just to give you a sense of what's going on in the options market right now. So these are contracts, and I don't have the other chart, which shows you basically what's in the money and what's out of the money. So this would show what we would expect. They have a lot of that line there is the difference between calls and puts, right? So you see there's a ton of, on the left side, that's the price below the current strike. The current strike is about $30,000, right? That's that at the money is about 30, 31. So that's that long line that we see there sort of in the middle. On the left, all those contracts, that's where the strike is, like, 20 something, 10 something even. And you got, wow, there's a lot of stuff going on in the puts. But if you were to look at it when you look at what's in the money, you would see a lot of calls. And you'd be like, oh, well, they're really, as we saw in the Gamma Index, they're net long. But you know what? They do have a lot of protection there on the downside, which we would expect to see. But notice there on the right of that chart, you get a lot of these calls there. A lot of people betting on some wild moves in crypto, buying those low delta options and hoping maybe they got a lottery ticket.
All right. And Lawrence, lastly, tell us about expirations. How did the markets react to the quarter end expirations?
So take a look at this. This is actually where those options that we saw in the previous chart. So now this is their expiration date, and you see they're all bunched up in two spots, right? You have July, the end of July, and the end of September. End of July is the end of the month. End of September is the end of the quarter. End of the month. Guess what happens 2 days before the end of the month? It's going to be when the Fed decides to raise rates. Guess what? I think they're going to raise rates. Call me crazy. They're still going to raise rates, okay? 25 basis points at least. Anything while that happens, though, if let's say they decide, you know what, I don't know, this thing's maybe causing more problems than we're not going to raise rates. All hell breaks loose. You're going to have a lot of options traders sweating it. What's interesting to note is that when we had the quarter expiration back at the end of June, which seems like so long ago, but it was a couple of weeks ago, we had a huge spike. We had a huge spike in activity and volume, yet we saw the price stay around 30. All right. It's like, the options market tends to like to keep the spot market, and it sounds like tail wagging the dog. Keep it around where most of where most of the options are hanging out right now. They're all hanging out at 30. My guess, going to hang out at 30 for a while is what I'm basically saying. So it'll be interesting to see what happens in a couple of weeks.
All right, Lawrence, thank you for that.